Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Gaurav, Pendse, Lead Product Developer with Nasdaq Investment Intelligence, to discuss an index that is designed to hold companies with low volatility and dividend growth. Gaurav, it's great to have you with us on Trade Talks. Welcome to the show.
Thank you. It's great to be here. Thank you for having me.
Tell us more about the Nasdaq US Low Volatility Dividend Achievers Index.
Yeah, absolutely. So the Nasdaq US Low Volatility Dividend Achievers Index is a very unique index in the market because, as the name suggests, it combines the benefits of low volatility and dividend growth, which is something that's never been done before. And this index also expands on Nasdaq's US Broad Dividend Achievers Index, which is an index that looks at companies that have grown their dividends for at least 10 consecutive years. So it's a group of companies that have very strong, stable, and mature businesses. And this brand of index in particular is very popular in the market, as it has over $50 billion in assets under management that are ultimately tied to it. But coming back to the index in question and the methodology for this index, the Nasdaq US Low Volatility Dividend Achievers Index uses this US Broad Dividend Achievers Index as its benchmark. And from there, it filters for large cap companies. So after this step, we usually have about 110 or 120 or so companies that remain in the universe. And from there, what we're doing is we're looking at the trailing 12-month volatility of each sector in the market. And there are about 40 or so sectors that are in the market. So we're looking at the volatility of, so we're taking the top 10 sectors based on their lowest trailing 12-month volatility. And in addition to that, we have a buffer rule as well that says that a sector can be in the top 15 if that sector is in the index. And after that, we weight the index based on volatility too. So a security with the lowest volatility will have the highest weight in the index, and vice versa. And we evaluate the index quarterly to ensure that it remains up to date with fresh market data. So Jill, we're really looking at an index that tracks the performance of U.S. large cap companies that have grown their dividends for at least 10 consecutive years and that are in sectors that have low volatility.
Why is low volatility important to the index?
Yeah, absolutely. That's a great question. So I think low volatility strategies have been gaining a lot of market share over the last few years, as they're generally better at providing long-term capital appreciation compared to say similar high volatility strategies. And on the surface, I think this might seem counterintuitive to most people because you might think that a basket of high volatility securities might actually do better than a basket of low volatility securities because, in general, investors are compensated for higher risk with higher reward. But there's actually a lot of empirical evidence out there that suggests that a basket of low volatility securities actually does better. And this is one of the reasons as to why there's about $73 billion in AUM tracking low volatility products. But I want to emphasize that within low volatility strategies, it's important to consider size and sector dispersion. And the charts that are shown here illustrate that large cap securities in the long run tend to have lower volatility than their small and mid cap counterparts. And within sectors, this dispersion is even wider. And we can see that there are some sectors that have consistently had low volatility. So as we've built this index, we've been cognizant of all of these things and taken into consideration not only low volatility as a factor, but also taking a look at size and sector volatility as well.
What about dividend growth?
Yeah, I think when people think of dividend growth strategies or dividend strategies in general, they tend to go in two different directions. So either they're looking at dividend growth or dividend yield. And while dividend yield strategies might provide that high current income or that high yield, they can tend to do so at the expense of falling prices. But dividend growth strategies, on the other hand, tend to focus only on rising dividend payouts. So while a dividend growth strategy might not showcase that high current income or that high yield, it generally provides a good balance between capital appreciation and moderate current income. And in the long run, this tends to provide a higher total return to investors compared to dividend yield strategies. The other reason as to why dividend growth is important is because the rising dividend payouts actually protect investors against inflation The chart here is showing the amount of dividends paid out by the constituents in the Nasdaq US Broad Dividend Achievers Index, which, as I mentioned before, is the benchmark for this index. And we immediately can see that the dividends paid out by these constituents have consistently increased. And not only that, but they've increased at a faster pace than inflation. So this tendency to provide long-term capital appreciation along with moderate income and inflationary protection are all of the reasons as to why dividend growth is really the foundation of this index.
And Gaurav, finally, to wrap up here, how has the index performed? How can investors tap into this potential?
Yeah, absolutely. And to answer your first question, I think the robust methodology that I just talked about for this index really translates into strong performance over the long run. And as we can see in the chart here, this index beat a lot of other peer indexes out there, such as the S&P 500 index, along with other dividend yield, dividend growth, and low vol strategies. But more importantly, I really want to point everyone's attention to two specific time periods: the financial crisis in 2008, as well as the heightened volatility that we're experiencing this year as a result of the pandemic. And in both of these situations, the Nasdaq US Low Volatility Dividend Achievers Index had a lower drawdown than all of these other peer indexes, and it even beat most of these indexes during the recovery period as well. And to answer your second question, I think investors can gain access to this index through the world's first ETF tracking it, the COSIF US Low Volatility Dividend Achievers ETF listed in South Korea. And at Nasdaq, we're very excited to work with Kiwoom Asset Management, who's the sponsor for this ETF and who have been the pioneers in the market, bringing highly successful products to investors. And moving forward, we're very hopeful in bringing the success of this index globally to other markets such as the US and Europe by launching products in those markets so that retail and institutional investors alike can gain access to such a robust and unique index.
All right, Gaurav, thanks for spending time with us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.